Good morning. Grab a chair. There's a few up front. Grab one more donut. Oh, thank you, Ron. So, g'day, mate. Shall I throw a pip on the bobby for you? Good morning, everybody. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hoo-ha! Hello, my name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. We're an ECN. You click a button, we enter your trade in the interbanking system. That's it. Clean, simple, nice, easy, affordable. Wonderful customer service. Swing on by, give us a try. Open up a demo account, huh? Take you, what, less than 30 seconds? Very nice. Very nice. Hey, we do these live Forex trading strategy sessions every day, Monday through Thursday here at Forex.Today. And every Friday at FX Street, where I'm Forex Speaker of the Year. Cool, man. Sweet. Today we're going to cover everything if we can. Forex, energies, metals, indices, just everything. Loufle. So why don't we just get going and play the happy music and then roll up our sleeves and do some technical analysis, huh? Makes me so happy to find Forex trading ideas for today at Forex.Today. Forex.Today. Boom! That just happened. Sally. You know, I gave up singing when I had to quit dancing, you know. Just, yeah, it's hard to keep time if I can't dance. So anyways, hey, yo, you know this kid? Said I didn't, but I know he did. Here we are. We are looking at WTI, West Texas Intermediate. Cool. So what was the good news yesterday? Less of a buildup than expected. But that's one of those weird things, like, isn't that still bad news? Yeah. A lot of oil. And the interesting thing about it is yesterday ended up being a down day. It did come up. If I zoom in a little bit, this is the daily chart, right? No, it's not going to let me do it. I guess we got to go into, let's do an hour. Oh, no. Why did that go all gobbly-goo? All right, well, anyways, you're going to have to pay attention here. I will need to change the color of my pen, and I am all-powerful. And what I wanted to draw your attention to was this top on the WTI, on the oil, crude oil from Texas. And that is yesterday's weekly central pivot point, and came up, hit that, stopped, reversed, dropped like a ton of bricks, and bum, 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 bum. We're continuing this downtrend, which you can see I already have drawn. I don't know if you can actually see it, but trust me, Forrest, it's there, right? There it is. There's our big analysis from a few days ago. Isn't that cool? Right? You can see it now coming down from the top here down. Cool. And then maybe up here, right? So nifty. Very, very, very nifty. So here we are at basically 39 bucks. And we were at 41. And the other thing I wanted to point out is the dollar's been quite weak lately. And therefore, if this had nothing to do with oil and only to do with the value of the dollar, West Texas Intermediate would be going up, not down. Ooh. So there's a little oil action going on here. Okay, and it's supposed to look like that. Okay, so I'm thinking down for a while, and if you were a bull, as you can see, I'm just trying to realign your satellites here, that it could come down. Now I think we talked yesterday about it could come down, hit the 21, come up, lower high, lower low, and work its way down that way. Yeah, okay, great. And the big thing here is using this, okay? Now, we would trade this way if it was a 1-minute chart, even though this is a daily chart, okay? Double bottom followed by a higher high. It's called a 1, 2, 3 reversal pattern. And in that scenario, very often I'm taking this area here, which I'm drawing now. Let me do that with a slightly different color. And my buy zone here, let me just make it red, not magenta. I'm looking at this in this situation, whether it's the 1 minute, the 4 hour, the daily, it don't matter none. Okay, it's just price action. And I'm always going to eyeball this. Now, does it always come back this far? No. That's not the point. Okay, it can be a little higher. Maybe it only comes down to here. It can be a little lower. That's fine. Every situation is slightly different. What is consistent is I'm thinking up, 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 if I'm only looking at this technically. Now remember, the caveat to this, as I said, oil is not trading on fundamentals. Okay? So, good luck with that. Doesn't make any sense, right? Miles says, so weaker USD, stronger WLSP. Yeah, well, and we did talk about it briefly yesterday. Okay, if a barrel of oil was, let's say $100 today or yesterday, right? And you wake up in the morning and the dollar's fallen by 10%. All else being equal, how much, right? Your oil hasn't changed in value, only the dollar. So what's the oil worth now? Or say, actually, how many dollars do you need to buy that oil? And the oil hasn't changed in value, 10% more. So now you got to pay $110. Oil has not changed, only the dollar. Okay. Now this is an interesting concept. When gold was $2,000 an ounce, there was lots of demand. Gold manufacturers in South Africa, for example, hired as many people as they possibly could. There was lots of demand on energy, and and all their variable costs went up. The rand also got quite expensive too, because for whatever reason, foreign direct investment, and all these different things going on in South Africa, because they had the commodities. So the South African rand went up in value, and all these different things, and wages went up, and energy costs went up, and it was a big deal, right? So after they minused all those costs, minus expenses, they had some sort of profit, right? Well, the interesting thing is when oil dropped to gold dropped to $1,200 an ounce. Guess what happened to their X? People were happy to have jobs. Their wages went down. What happened to energy prices when commodities fell down? Energy prices fell. But also, what happened to the South African rand? It tanked. It tanked. Like just fell off of a cliff. And so the profit margin, right? So, and then I'll say expenses minus the value of the ZAR, right? And ZAR being up, and here minus the ZAR, whatever, being down. The end result is South African gold mines made a lot more profit at $1,200. The reason why, or one of the major reasons why, is the value of the ZAR went down and the value of the dollar went up. expenses went down, and guess what? South Africa doesn't sell their gold for rand. They pay their workers in rand. They pay their bills in rand, but they sell their gold for dollars. So even though it was only $1,200 an ounce, they made way more money. Paradox. Paradox. And it's one of these things like I tell you, the less you pay yourself month over month over month, the more money you'll make at the end of the year. In particular, at the end of the second year, and phenomenally more money at the end of the third year. So if you want to make more money, pay yourself less. Weird, huh? I get it. I'm a little slow. Okay, so that's that. Let's take a look here. Japan didn't have a good day. The Eurozone did not have a good day. Didn't have a good day. The Queen did not go for lattes today. So what do you think is going to happen in the U.S.? Right? So should we expect yen strength? Well, we had some yen strength, didn't we? And it's sort of petered out. So therefore, if you are yen bull, you're going to start looking for double tops on some certain things, right? Contrary to that, if you think the stock market's going to go up today, the yen should get weak. So give me your thoughts on whether. Okay, I'll give you hypotheses. Stock market goes down in the United States. Why? Explain your prediction. Give me some facts, baby. Oil's down? Okay. But that was yesterday. Okay. If I put that to a 15-minute chart, it may look like oil's up. Okay. No rate hike for April, fine. But why today, Ryan? Why does that matter today? Maybe it mattered yesterday, maybe it'll matter tomorrow or Monday, but like, why now? Doesn't mean anything. It doesn't mean it has to go up or down now. It's going up today. Aha! Mr. Dubois! End of the month. Explain more. End of the quarter. Ha ha, damneth. Dying, damneth. Right? Profit taking, now you're getting it. Japanese fiscal year end, I'll accept that. You think anybody wants to book some profit? Now remember, I told you this. I told you, I swear. When the stock market was crashing in January, didn't I tell you it was just money managers rolling over their positions from a portfolio that did well in sideways moving interest rates to a portfolio that will do well in rising rates? And that all it is some profit taking, and then they're gonna, it's gonna fall. And if they couldn't get an Apple last year and Apple drops 20%, well, maybe they can get an Apple this year if that's what they wanted to do. Right? They rebuild their portfolio for a new year, right? For a new central banking policy, right? I said, Artem says, I said, don't panic, prepare to buy. Yeah, so did you buy? Stock market's actually up for the year. I thought it was the end of the world. I thought it was China. Remember all that stupid stuff? Oh, it's China. It's China. Shut up. Shut your mouth, right? Are you breathing my air? Right? It's so funny though, isn't it? Now, in hindsight, isn't it funny? Can we laugh about it now? But it was the end of the world, remember? And I'm like, look, 70% of the Chinese stock market doesn't even have a college degree. They're not professionals. Yeah, Miles says it right. It was scary at the time, right? But I'm like, you're smart money. You're calm. You're collected. And I told you months and months and months and months ahead of time that the yen was going to be strong in January, so you were prepared. And then it crashed, and it was the end of the world, and people were trying to explain why. And it's China. It's the end of the world in China. I'm like, no, actually, it's not. So anyways, some people book some profit, and they might want to, or let's say they made some trades, and if they're shorter term, type traders, they want to book that at the end of the quarter and say, well, in quarter one, when it was very, very scary, well, we made 8% or something like that, right? We're like, yeah, done. Next, quarter two. So, do you want to plan for the quarter? Okay, what's going on? I already told you this last year, 2 months ago, 1 month ago. Actually, I told you 6 months ago, maybe 9 months ago. What's coming up? What's important about the second quarter? IMF. IMF. Yeah, IMF. And that sucker comes out when I'm in China. Right? Isn't that the 16th? When that thing comes out? Or is it a Wednesday? Maybe it's the 14th. That's cool, so I'll download it and I'll read it on the plane. Okay. Somebody Google that. So be ready. And then so isn't the $1 million question now that the Fed's going to raise in June? Okay. So can somebody tell me the Wednesday of the FOMC announcement for interest rates in April? Can you tell me the day that the Fed raises interest rates? Remember, it's a Wednesday, right? Don't give me the Tuesday, because they'll say Fed meeting, but Fed meeting is 2 days, right? So give me the Wednesday in June now that the FOMC announces their decision and, more importantly, has a press conference. Anybody? Ryan's got it down somewhere. Is anybody Googling it? Google. Holy smokes. Nobody cares, huh? All right, thank you. The 15th of June. Okay, what day is the decision on Brexit? So if the Federal Reserve Bank of the United States of America's Federal Open Market Committee is worried about external risks, what's the likelihood they jack interest rates? Essentially like a week and a half or a week before the UK could exit. So if that is true, I don't know if it's true, but that's my thought, right? Like, are they going to pull the trigger that close to event risk? Or are they going to say, well, things are improving, we're data independent, but there's some huge external risks, So Wouldn't it be interesting if they don't raise interest rates till December, and it's a one-hit wonder, right? Right. Well, that's the next question. Ryan says, okay, so now we get October. When are the elections? So the next meeting in play is usually October for the FOMC, right? When is the United States election? You don't have to give me a day, just give me a month. Come on, you Americans. November. Ha! Oh, dang it. This makes it hard for the Fed, doesn't it? Okay? But December is certainly clear, free and clear of all this stuff, right? So what if it's a one-hit wonder? Okay, so you write this down now. Imagine you actually do this. You start timelining thing and say, well, what would affect this decision? What would affect that decision? Then let's say scenario A. They don't raise in April. They don't raise in June. They don't raise in August. They don't raise in, was it early August? What's the next one? Is it October? And then they don't, and then they do raise in December because they got to do it, right? Because they told us 4. Then they said no, 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 2, and now let's say it's actually 1, within reason. Oh, did I screw that up? It's July and then September and then October and then okay. Okay, so they raise in December, but they don't do anything else. Explain to me, Lucy. You explain to me. What happens to the US dollar between now and then? Ryan, I wouldn't be shocked if they just stopped that stupid dot plot thing. Weak. Weak dollar. Okay. That's it. And just to remind you, and then we'll do some more technical analysis. Do you remember when the idiots, and I mean like pretty much everybody in the entire market and every talking head on TV, were blabbing and blabbing and blabbing about the Fed has to jack up interest rates, Fed has to jack up interest rates, Fed has to jack up interest rates, the Fed's being negligent to not jack up interest rates. You remember early in the year, 2015? The dollar was strong, and I'm like, no, I don't think there's any reason to. I don't think there's any reason to. I don't think there's any reason to. Then finally in June, Grandma Yellen says, actually, yeah, they are going to raise interest rates this year. And then they're like, no, they're not going to raise interest rates. So they're not going to raise interest rates. So the dollar was unnecessarily strong in the first half and then unnecessarily weak in the second half. And so on and so forth. So very interesting stuff. So keep your one eye open for a divergence in obviousness. But right now, that was 4. It then is now 2. May only be 1 rate hike this year. That means the dollar's overvalued. Do you want to buy euro on the way up? Well, most likely euro's going up because people are getting out of the short. Do you want to buy euro with quantitative easing and negative interest rates? Well, that's up to you, son. But, okay, and my favorite joke in the world, right? And that's a big but. Carry trade, boop, 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 stock market up, free money rally, right? Cheap money rally, cheap money rally. So yen, USD yen down, everything else yen up. Okay. And maybe this is our canary in the coal mine. Okay. This is Kiwi relative to the US dollar. And what's amazing is their monetary policy is of cutting interest rates. Hallelujah. So Kiwi, should be weak. You would stink. Man, what did it do there? Huh, weird. Anyways, let's just do it that way. Won't let me adjust it for some reason. Really? Kiwi is a commodity currency, eh? Don't forget mutton. Yeah. But the interesting part, guys, is the central bank, the Reserve Bank of New Zealand, RBNZ, they have been cutting interest rates. Okay? Well, I can adjust it that way, but not the width. But anyways, it kind of is supposed to go up. Okay? It's supposed to go down. Sorry, I can't think and talk at the same time. The Kiwi is supposed to be going down if the central bank is lowering interest rates. Yet, something else interesting is happening, isn't it? So we have to pay attention. And, is that a legitimate higher high? Could be. A rabbit could be. So, what's the thought process there? Well, you got two choices, right? Okay, we make the high, we come down, and then we slingshot up, or it's a full trip down, which makes us vulnerable to that, really, but we're always vulnerable to that. It's a neat thing, though. It's a very neat thing. It's quite neat. Okay, look at this shot down, huh? Shot through the dark. Yeah, Looks like that wick had some importance to it, huh? Golly, I wish I bought it right there. All right. Right? Should have bought it at 60. Okay, Miles says something important. Why fundamentally is it going up then? Because people are buying it. So Mark says they will cut again, Wayne. Faux show. Why should I buy the Kiwi? The only reason is yield, nothing else. I am long-term bear. Sure. Yeah. Good luck with that. Okay, so it's one of these things, guys. You could be stubborn, or you better recognize, right? If it's doing this, the technical trend is up. Okay. If I were a bear, if I was you, and I understand where you come from, Marky Mark, right? So that's cool. But if I was you, I would kind of wait for something like that and then get in the game. But the cliche, the old saying, right? The market can stay irrational longer than you can stay liquid. You don't want to be short and holding the sucker and saying, well, it's supposed to go down. Right? Yeah, no, no. I'm not saying you're wrong, but you are assuming a lot of risk. Yeah, 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 yeah. You know, it's like the education. I study finance and capital market systems at Harvard University. Not a bad little school, and yet the finance professors are completely, totally, utterly wrong. And I'm the smartest person in the whole world, and I can say that. Um, but it's true. There's the textbook, what you would think would be logical, and then there's sort of like the reality. And yeah, this is supposed to go down. Okay, right? Right? Wicked smart. Yeah. It's supposed to go down. Okay, good. Sounds good. But it's going up. It's going up, dude. It's going up because people are thinking end of the year. They're thinking next year. They're not thinking last quarter. I don't know. That's it. I mean, they're making different decisions. Somebody bought it at the end of January when oil bottomed. I told you, prepare. This could possibly be the bottom for commodities. All commodities. We looked at the CRB index. We looked at the Baltic Dry index, right? I said, watch iron ore and coal and copper and oil and well, it just so happened to go up since then. Grains are doing great. So it's just one of these things like you got to know when to pay attention. And I said, look, this could go by, and in September and October, everything will be up, 1,500 pips, and and then you'll realize what just happened. Is this just dollar, weakness, basically? Yeah, but who cares, right, Sammy? Sammy's like, well, this probably has nothing to do with the Kiwi and everything to do with the dollar being overvalued, right? So let's put it in that context, right? Sam's right. The Fed told us they were going to jack up interest rates 4 times in 2016. Look what happened. And then we're like, well, maybe it's not 4 times. Maybe it's not 4 times. Maybe it's only 2 times. Maybe, oh my God, we were lied to by a central bank. You right? I mean, we're getting a big difference in story now, aren't we? But let me, riddle me this, right? What happens if someone actually buys the Kiwi dollar? Yeah, but this is going up. So Sam's like, well, what if this is just dollar weakening? Yeah, probably is. I totally agree with you. So what if someone actually buys the Kiwi? This isn't dollar weakening. What if it's Kiwi dollar strengthening? Hallelujah, perfect storm, right? What happens to commodities? Right? What happens to commodities if the value of the dollar falls? What happens to commodities if stock markets rally? Demand goes up for commodities. Holy smokes. Right? So just because you're absolutely totally correct, Mark, don't let some, profits go by. Just be happy you don't have to explain to a professor why he's wrong. Because you can't do it. Right? No, I know you do. But so yeah, you're right. This should be going down. Buy it, make some money. And if you're worried about dollar, buy Kiwi yen. Because if the stock markets rally because the policy in the United States is accommodative, then good. Oop. Yeah, Sam. Sam says it almost seems like it was planned up front, right? Yeah, it's hard to believe they're that stupid. A lot of people would say no, they're that stupid, but maybe they're that smart where they played everybody, right? And bear in mind, I think the Europeans had to deal with the Chinese as well. When the euro gets too strong, the Chinese sell off some of the euro holdings, dump euro on the market, and bring her back down. Does Mario Draghi want the euro up around 120? What's Draghi gonna do about it? What's Draghi gonna... So Draghi's only got some money. He's already spent a bunch of money to weaken the euro, right? To increase asset prices. Do prices go up when purchasing power goes up? Right? Think about that barrel of oil. What if the dollar went up 10% overnight? Now you only need $90 to buy that barrel of oil. Okay, you see what I mean? So, what's Mario going to do about it? He can't just spend more money than he said. They already got negative interest rates. They're already buying, what is it, 85 billion euros a month or something like that? Now what? Right? Didn't they raise from 60 to 85? I can't remember. It doesn't really matter. So what do? You pick up the phone, call your buddy in China. Ni hao ma! Right? Ciao, Draghi! Right? And you say, hey, do me a favor, huh? We hit 115, dump it. You know what I mean? Huh. Cool. So, anyways, we'll see. All right. So, more importantly, do you remember I keep drawing these things? Do you remember yesterday I showed you the Kiwi yen? We were up here, and I said it doesn't matter, right? I hope you guys listen to me. Sometimes I doubt it. But I'm like, we were up here. I'm like, look, all you do is you draw this side across, and now you have a new buy zone. Right? Cool. So, that's only 50 pips, but, you're welcome. Right? Very similar to this one. Great. Cool. You're welcome. So you're just killing it now, right? So going back to what we were talking about before, I wouldn't be shocked if we get a lot of downward pressure on the stock market today on profit taking. And do we face any other event risks that may take people out of the market? Or are people going to throw new money in? What do you think? Old money out or new money in? Yes, tomorrow is month 119. I've traded non-FAR payrolls live at fxstreet.com 119 months in a row. That's sort of like your golf streak, huh? How many times in a row can you break 100 on the upside? Yeah, that's amazing, huh? 119 months. Yeah, I started trading Forex when I was 9 years old. Stefan says, why do I think profit taking? Okay. Profit taking, end of the quarter. And then, let me go back to where I started, guys, because, sometimes I show you things and maybe I'm not clear, maybe you don't ask enough questions, but let's go back to, let's bring on Captain Obvious. Captain Obvious. Sir, yes, sir. Get over here. Sir, yes, sir. Okay. Japan's stock market fell. The Eurozone index fell. The German stock market before this, if I go on to the hourly, these should all be hourlies really, but let me just for clarity. Okay. So on and so forth. All right, so the German stock market fell. Right, the British stock market fell. And we've hit weekly targets already. Isn't that funny how that happens on NFP week? You hit your Friday target on a Wednesday. Funny, huh? Like a clown, right? So what do you think, Stefan? If you were a gambling man. So I'm thinking money managers book some profits, put it in their quarterly reports and their quarterly newsletters to clients. Also, these guys usually on their calendar, their admins, their administrative assistants put down on their calendars at the beginning of the first quarter, you need to call your clients and talk to them. And, oh, hello, John. It's Wayne over at Wayne McDonell and Associates. Oh, hey, Wayne. Boy, tough quarter, huh? It was really scary in January. Yeah, but as you know, we looked at it, and based on our analysis, we just thought it was portfolio balancing and a new policy at the Fed, so there was no reason to really panic. But we did go to cash on time, which was great, and we did find some opportunities to get in some value stocks. Yeah, there were some things that were punished, and we kind of tiptoed into a couple of energy stocks as well, just because we believe over the course of the next 5 to 10 years that there will be stability in commodity prices. I mean, we're just looking at a 5 to 10 year horizon on that. And let me just be frank: oil at $25, you got to do something, right? Right. Good, sweet. So, how's the golf game, dude? Yeah, still got it, right? All right. Well, remember, left arm straight. How's the wife and kids? Yep. Fine. All right, kind of jumped, bud, but just want to let you know everything's good. We're golden over here. We're doing all right. It was a pretty decent quarter. You didn't suffer like your buddies, but that's their fault. So, hey, peace on earth, dude. Cheers. Click. All right, call the next client. Jimbo. Swanksta. Hey, woo, what's up? Wasabi. Hey, we're up. Another quarter up. Lots of green, dude. Cool. Catch you next quarter. Let's get together. Let's do golf. Cheers. Click. Boom. Call the next client. But this is what these guys do. You know what I mean? This is your job. You got to think about the people. It's not just colors on your screen. You got to be Neo, man. You got to look through it. What's happening? That's what happens. These guys, wealth managers, have to call their clients, and it's a pain in the butt. They don't look forward to it. They're like, oh my God, can't I just collect my 1% management fee and be done with it? Can't I get like a fourth certificate so I can have another acronym after my name? Wayne McDonell, CFA, CFP, CTA, Series 7, Series 13, Series 34, Series 64. I need another certificate, dude. And this is what they do with their time. And the worst part of their job is they have to call their clients once a quarter. Because, I don't want to call them. I don't want to call my clients. I don't want to call my clients. Well, it's the only thing you do. You bought some mutual funds and you charge them 1% of their net worth. year after year after year, and all you did was buy some mutual funds 4 years ago. And you don't even want to call them on the quarterly basis. Yeah, man. I'd rather be golfing. So, anyways, so when they call, they want good news, right? And they just got to say, boom, hey, we got through the quarter. Pretty scary for some in the beginning, but we saw it as an opportunity. Bought some good stuff. You're up. You're golden. You know, catch you later and catch you in the second half. Don't worry about it. We got it. Got your back, dog. Click. Call the next client. So, how would you like to make that call and you lost money? Oh, well, you know, China was down and oil was down, and it's not my fault. I bought a bunch of mutual funds, and yeah, well, I didn't short, I didn't hedge, I didn't do anything. You lost some money, but I'm going to charge you 1%, right? Yeah. So, Miles, what I used to say to people is I say, you know, your first, let's say you want to turn pro, and you're ready, you got some money, and you're like, I want to trade Forex full time, and I'm going to live off my money. One piece of advice, go to your father-in-law, okay? Have him throw some money in with you. Because you might like lose 50 grand. You're like, oh man, I gave it a shot. I thought I was ready. But, you know, cliche, made a bunch of big mistakes, jacked up leverage, blew up my account. But I guess, you know, I'll do something else, you know, and it's okay with you. And you're like, yeah, well, you know, 95% of traders lose money. It's okay. It was only 50 grand, right? Whatever your number is. Now, lose 50 grand of your father-in-law's money. You got to look at that face during the holidays, year after year after year. You son of a bitch. Whoa, Grandpa! You mother. Right? So. No, Artem, you know, and we get into these conversations, but we know we really, you know, I don't know. I need to do some sort of special event or a class or something. But you know, how do you find clients? How do you talk to clients? How do you do fact sheets and PowerPoint presentations and you know, elevator pitches and handshakes and you know, where do you find them and all that kind of stuff. Big long conversations, and for most people, they're we're trying to find how to make you profitable, right? So anyways, one thing is to make you profitable is to get you to understand that there's more to the market than colors. There's more to the market than just this 5-8 cross is up. Well, and again, and again, and again, and again, and again. What's happening right this second is pointless and irrelevant. Okay, you already did the analysis. You already made the trades. What's happening right now is irrelevant. If you're just jumping in, chasing price, trying to squeeze out 15 or 20 pips, and you feel good about it, it's fool's gold. You're just totally fooling yourself. So what you do today is like what I go through, and I'm doing this analysis. Like I showed you yesterday with the Kiwi yen. All right, we've peaked. Right? We looked at it 24 hours ago. It peaked. We're at resistance. Great. What do you want to do? Well, the trend has been up, so buy the next dip. We're great. Where's the support? Boom. All right, so maybe tomorrow at London. Look, boom. We were up here yesterday. Did I say buy it? No. Let it drop. Here's my buy zone. Put it in there. Stokes kicker off of moving average at London Open. Boom. Easy. Right? And a lot of people, what they'll do is they'll trade this down, which I suppose we could have done in New York. I don't actually like that very much. I find it very scary. And, I'd rather be long and gone. Okay. Now, I'll tell you what. If you're going to play the double top, you need to get involved now. So this is a now thing. Okay. Okay, and I shouldn't have to explain that, but if you're a bear or want to be a bear or you think this is topped out and this is the end of the move, if you think dollar's strong on the stock market coming down today, okay, good. Okay, now you do have to get serious. Are you at resistance? Yes. Monthly R1. Was it price action resistance in the past? Yes. 1, 2, 3. Okay. Is there a psych level? Oh, yeah. 78. So what's your plan? Again, you can't watch it and say, when I'm down here, maybe I should short. No, no, no. You should be short here or here. Which one? Well, that's your alpha, baby, right? So now you got some serious decision. But again, you probably should have had this set up 3 hours ago, right? Okay, so what do you want now? Well, it's already started to diverge. Okay, is there is there evidence here that maybe somebody shorted at the double top at the monthly resistance pivot point? Right? So once again, this is easy if you were prepared. Figuring it out on the fly is really difficult. So you could sit here and say, okay, I'm on a 15. I did my analysis on the 4 hour, let's say. 4 hour wants to come down. Hourly's getting ready, so I'm going to front run it on the 15. And you're watching this and you're like, what do you see, right? What do you see? Huge green candle. Short that? No. Little topsy-turvy, little spinny toppy? No. Right? Not unless the next one's bearish engulfing. Okay. Oh, yep. Next one's green. Okay, that's fine. Oh, look at the divergence. Cool. Next one's huge green. Oh, wicked on me. Wow. Next one's red. All right, time to take the short, right? If you're not in on that, then what you're probably going to see is maybe like this. Okay, that would be your plan. Should be pretty easy. Okay, what you don't want to do is you see it down here and then you decide you want to trade short. Okay. Yeah. Yeah. So, this stuff should be easy, right? So you're either short here because you were ready, or you've missed it, and that happens. Don't worry about it. You just remember, you can only sell at resistance. So the resistance is either here or the lower high, right? You could get a double top even better. Okay? Hua? But you can see, if you were prepped and ready, it's not a complicated trade. It's not a hard trade. It's a double top. And you don't trade just at a double top. Like, you don't throw down a limit, right? You say, hey, I wonder if people also have orders there. Okay? And you watch this go up and you're like, okay, it's about to hit those orders. We're at the psych level. We're at the monthly resistance. This is it. Double top. If it drops, I'm going to take the shot. Holy! I mean, right? Like, look at that. Well, I don't know. I don't know if there were any sell orders there. I don't know. Right? But you say, Wayne, I can't catch all those. There's like 700 different currency pairs. Right? How do I know, Wayne? That's Kiwi yen, but I've been looking at like Kiwi, Thai baht. I'm like, well, maybe you shouldn't be staring at Kiwi Thai baht. But you should be able to go through and set up plans, right? Here's the support, here's the resistance next. Here's the support, here's the resistance next. Am I right? Okay. So what if you don't sell up here? Okay. Well, then maybe here or here. I mean, that's why I have them already designed, right? And the interesting thing is, if we don't make a higher high, Like, there's a possibility this slingshots. All right, cool. But if this comes down, it's going to be very difficult to call this an uptrend. Now, I'll probably still buy it, but okay. But that could happen. Okay. Yeah, and then we were talking about this yesterday, huh? Remember? Right? Back to the cloud, back to the cloud, back to the cloud. These are all buy zones. And if this comes down, it's going to do stuff like this, and we'll be on the other side of that cloud or whatever you want to call that, right? What do you call those? Spectrums or something? I don't know. Whatever. Yeah. Well, I was just playing around with this idea that some people just have difficulty reading the market. And I'm just trying to find like a bonehead way, right? They're called rainbows? I don't like calling it a rainbow. If they were, I don't like. Right? Waves. Yeah, okay. I like clouds. That's kind of neat. But sure, a wave. Sounds too much like Elliott wave, though, right? Now, another thing maybe to point out, because I didn't see it before, but do you remember me drawing? Oops. These horizontal lines? And I think it just broke the trap, didn't it? I don't think it made this one here, and I don't think it made this one here. Is that correct? Or maybe not. Maybe that's not correct because it's a 4 hour. But anyways, look at the step ups, huh? They usually have all kinds of colors and like a stairway. Oh, okay, fine. Look, I just want you to get out of bed and read the market, right? And it shouldn't take, a lot of time. Okay, is the market bullish or bearish? Okay. Is it aggressive or conservative? Conservative. 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 Am I expecting a higher high or a double top? Double top. Okay. Good. See, this is why I ask these questions. This is why I ask these questions. Amazing. Good. Well, good. Why is it conservative? Because the 55 is in control. 21 is dead. I was aggressive here, I'm conservative here. Market conditions changed. An amateur behaves exactly the same way. And we'll trade it this way and expect the same thing here, even though the market conditions have changed. Amateur hour. So even if this does go up, it's not as likely as before. Okay? So the market is very aggressively moving up in here. Riding the 21, riding the 21, riding the 21, riding the 21. Boom! Right? Come back to the 21. Boom! Back to the 21. Oh! Right here, huge red flag. Slowing down. Whoa! And if it does that, wow. And how do I describe this in my book, guys? The Forex market reverses like an old man easing into a hot bath. It's not going to be a V-shaped reversal. It's going to ride the 21, then it's going to drop, step down, ride the 55, head up, double top, drop to the 200, ride up, and now the 21 will be here as resistance. Boom, drop to the next level, and it's gone from bullish to bearish. Yeah, Miles. Well, it's part of neuro-linguistic programming. Okay. If you can program your brain to remember things, it's amazing. So I'll never forget something, and it was designed because I programmed my brain and I programmed my wife's brain. So many years ago, I take her to Paris. It's her first time to Paris. Very fabulous, beautiful city. And we were basically on. I don't know if it was that night, but I think it was her first time to the Eiffel Tower. Now, eventually, I proposed to her under the Eiffel Tower as it was sparkling. Um, but I think we had been there a few days earlier during the. I don't know. Maybe it was the day I proposed. Holy smokes! So I don't remember that part. But anyways, we're walking to the park. There's some little streets and cafes around the edges of the park where the Eiffel Tower's in, and then you got to walk across the park, and there's these trees everywhere, and the night was beautiful and all that kind of stuff. And I said, hey, stop here and look at this tree. Because you get caught up in the big, right? You get caught up, you're in Paris, there's the Eiffel Tower. She's probably expecting, is he going to ask me? Is he going to ask me? Right? All this kind of stuff. All your mind is racing, a million miles a minute. Yeah, pound is just coming down. No big deal. All right, so anyways, mine and these are the things that you end up forgetting the details, right? And I said, hey, before we get there, look at this tree. Look how beautiful this little tree is. It's just this tree in the middle of this park. Millions of people visit this place, every month. No one remembers this tree, but this tree has been standing in front of the Eiffel Tower or next to the Eiffel Tower for decades. I said, and if you actually look at it, and I'm like, look at the bark. It's like this beautiful bark. It's just a really interesting tree. I said, touch it. Let's put our hand on it. And so we both put our hand on it. And I said, we can file this memory away until we're 90 years old and we're holding hands. And we can always remember this tree in Paris next to the Eiffel Tower. And sure enough, boom. Yes. And that's neuro-linguistic programming. So now it's an emotional memory, it's a tactile memory, it's a visual memory, because all these different things. And sure enough, boom, it's there forever now. And what shoes were I wearing that day? What suit? I believe I had a black suit on or black, but I don't. Do I even own it anymore? I don't know. Right? Cool. Let's see. CAD took a little spike, but I don't see it on. Yeah, so we got some good news on the spike, on the CAD, I should say. But in my book, I recommend and show you different neuro-linguistic programming techniques so that you can become a better trader using that technique, so that you can program your brain. Because we know it's more than just 5/8 crosses, isn't it? It's more than the Stokes. The Stokes won't make you filthy stinking rich, right? So there's some or other skill base. I mean, you'll need to know how to use these things, but it's not it. It's like the prereq, right? Amazon, Freddie boy. Where do you get any book? When, right? Yeah, I don't know. Amazon. So, anyways, because and the techniques I show you, you end up storing the information in like 4 or 5 different parts of your brain. I'm not joking. You using my techniques, smell, your olfactory senses will actually be used to store proper trading techniques and behaviors in parts of your brain that you'll never forget. And I'm not nuts. I'm not crazy. But I kind of think you have to. You have to be in Forex, huh? Okay, so that's that. Hallelujah. Okay, kind of looks like there was a 618 back to the psych. Cool, huh? That just happened, baby. Pretty amazing coincidence that it came back exactly 618, came to 77.98, and then dropped. That's interesting, huh? Right? 78,000. Was that the top? There you go, yo. That's the 30 minutes is down. Front running the hourly. There's the divergence. Come and gone. Right, but the point is, right, Keith, is that we talked about it casually. We pointed it all out. And then if you missed it, this is how you trade it. We talked about it. We trade it, put it there, lower out, blah, blah, blah. It's got the divergence, the hour, the da, 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 boom, boom. And you know, I couldn't have been the only person on the planet thinking about it, right? So someone else said, oh, kicked off the psych level, I'm going to sell the lower high. Yeah, Fred, it's called strategic and tactical Forex trading. We got some CAD action going too. One caveat though, someone left a review and said it was the worst book ever written, which is pretty amazing because so many books have been written, in particular bad ones. But well, I apologize for that. I'm not really a writer, you know. But I did my best, so apparently it's a pretty bad book, but I did my best. No, actually, a couple of the bad reviews, Artem, are people like one guy. He said he sat down in Barnes and Nobles, read a chapter or two, thought it was pathetic, just a pile of rubbish, put it back on the shelf, and left a bad review. All right. And then a couple of other people say, it's just a rehash of all the other stuff you can get on the internet for free. I'm like, really? Because I wrote that, and I haven't really read anybody else's crap, right? That's just not how I learned. And then I thought I spent like a huge amount of time talking about stuff that specifically I did step by step by step. Man, I don't remember. I doubt any of that's been on on any other website. Like it just like is strange to me. You know, I do things weird, don't I? Like I draw my fibs upside down and stuff. I'm like, I don't think you're gonna get that in any other place, but whatever. That's what they say. So Kitty Cat Yen made a pop and a stop, maybe. Okay. Should we be worried about the weekly? Let me actually write it out so it's painfully obvious. Okay, there's a WR2. What is significant about that? Okay, W means weekly, R means resistance, and there are two resistance pivots that I like to use. There's R1, which I call minor. I'll just put them in. and R2, which I consider major. Okay? So this is the major resistance for the week. Here. Huh. Well, that could be important, right? That could be important, right? Well, you guys bring up an interesting thing. It's not an entry. It's a target. If you're a bull on Monday morning, that's your aggressive target. I don't call it a sell zone. I had to clarify this maybe even yesterday with somebody. It's not a sell zone. It's a pivot profit zone, as described in the book that I wrote 100 years ago. Pivot profit zone. It doesn't say short. It says take your profit, Mr. Bull. Okay? So then this other one is MR1. So it's monthly resistance. And the prime aggressive target for the week. And so that MR1 is right here. Anything else going on? How about 87.0000000000? What do you think? Should you buy it there? Mama didn't raise no fool. Right? Who would buy that? Sucker. Right? Someone without a plan, someone chasing price. So then, what happens if it does go up here? Very unusual. Right? And it means if it's unusual, there's a certain level of risk associated with the pips you're making. And as long as you understand what you're doing, I'm okay with it. But you need to say to yourself, I'm that bullish. Oh, I'm that bullish. Okay. And you're just like, yeah, I get it. Oh, I get it. But according to my, my studies, we're on our way here. And this is just a little stop, right? And we're going to breach up, come back down, breach up. But see, I would rather do it that way, right? So let me dive in here now, zoom all the way back in. If it does break, what I would rather do is, let's say it goes from 87 to 87.50. Oh, come on now. Let me grab this. There it is. Let's say it goes to 87.50. Okay? Then I say, cool. I'm going to buy the dip up and then hit that target. Go for the monthly target. Okay? Would I do it now? No. I can't. I won't. I refuse. If you liked it so much and you were that aggressive, you should have bought it when it was oversold. Okay? The 55 suggests, however, rollover. Okay? My mama doesn't like your trades, but she loves everyone. All right. Hallelujah. So maybe you come up, you hit resistance, you make a lower low, you come up and you sell a lower high off of the roll reversal. Is that how you do it? Sorry, I know that's mean. I know that's mean. I know. But you got to make the point, right? I don't know if you could probably see it, right? Oops. Right? So, whatever. So, got to jump, babe. Tomorrow's a Friday, I think. Yeah. So I'll be at FX Street for Trade Non-Farm Payrolls Live number 119. If you could go there and register, that would be wonderful. I'd like to thank you for being on my team. I'd like to remind you that this is a hard gig and it's not going to, success is not going to come easily. And if it does, oh, you just wait. Just remember how good your success feels now when in the near future you're going to be staring at the abyss, wondering if you should fall in, never come back. So you got to take it small, stay humble. And, you know, one message I've been sharing lately is you need to develop a 3-year plan. And if your plan is to make a lot of money this year, you're probably going to be sorely mistaken. If you'd like to make a lot of money 3 or 4 years from now, you're on the right track. And the odds are good and favorable. You got to grow your account size, lower your risk, and let compound interest make you rich. Oh my gosh. Is that going to be on my tombstone? So peace on earth, may the pips be with you, may your profits be above average. Thank you for being a client of TradersWay, and if not, for shame! Maybe you should go to TradersWay.com, pay it back, show some respect, and open up a demo account. Cheers.